oil demand is faltering in China. And here in the United States, the gasoline driving season is now ended. Inventories are in relatively good shape. We're going into a lower demand period as far as the consumer goes. And to top that off, we're going into the seasonal refining maintenance period, both in the United States and in Europe, that is going to decrease crude oil demand. So there's a number of factors that are really working against OPEC over the next few months. And what I really think is they want to see Brent crude oil prices at $85 to $90 a barrel to balance their budgets.
Andy, we're looking at a number of brokerages downgrading their growth forecasts for China to below 5%. In terms of demand coming from the country, the world's largest oil importer, is this a more longer-term story, especially with this huge transition to EVs, which I believe now make up 50% of cars on the mainland?
I think that's exactly right. The proliferation of the EVs in China is decreasing the ultimate demand for gasoline at the same time that they're using renewable fuels for their trucking fleet, which is decreasing the demand for diesel fuel. And this, is, of course, is happening at the same time that we're seeing a slowdown in construction, which decreases the demand for diesel fuel as well. So the world is really now looking to India for its growth. And in India, at least over the next 5 to 6 years, we are expecting demand to increase by 4 to 5 million barrels a day. And to meet that demand, India has announced a number of refining projects.
Yeah, India is the world's fastest growing economy. We just got, of course, a check earlier this week with the latest GDP reading. In terms of prices, we're looking at a WTI just under $70 per barrel. Where do you see it going?
Well, I have to say, seeing a 6 handle on WTI is quite the surprise. Earlier this year, I thought that by the end of this year in 2024, we'd see Brent at $85 to $87 a barrel. But I really believe that we need to temper that expectation down to around $80 a barrel, given the supply-demand dynamics that we see today. I would point out that with all the geopolitical events we've seen in the Middle East, we've yet to see a supply disruption. And of course, if something should occur where the hostilities grow between Israel and Iran and start to impact the export facilities in Iran, we could certainly see oil prices jump right back up.